CMG 335 call, triple witching me, expiration monthly Friday. Lots of things expiring today. We bought and sold this at $7.20. We bought it yesterday at the lows and held it overnight and sold into the gap, took our profits, but now we're going to steal the bid. And what we're going to do here is we got bids lined below the market. Now here's the price of the equity of CMG right here. That's the highs at 342.97 and the lows that we just made, 33 lows at 339.05. And this is in the money. It's a Friday expiration, and this is live in the marketplace here and now. At 7:51 a.m. Pacific Standard Time, the date 9/21/2012. Fall will start this weekend, earnings season and everything else. But we're going to steal the bid here. Our limit order out here is that we got some down here at 370 now. And it's the same ones that we sold at $7.20. And there was another 100 contracts that was executed out for profits. 100 of those there, he came out at 530. A print just went off at 410. That creates the low. That is the range 3.40 in this call contract, which is in the money 335 call. And Chipotle just printed 34 lows at 338.87, and he brought it right back to the previous day's close at 338.89. So, Mr. Goalie, go over there and cross above the $4 guy and go to the low print just on one and keep the lower level down here. Drop that 370 bid down to 350 bid and start making a market up here. Go $4.10 and contract the bid and ask by 60 cents.
On the bid at 60 cents for two.
All right, well, I'm going to have to go for this one. So we're trying to buy these down here on the low at 60 cents. And we're going to probably get hit. It looks like we just got hit. So they were $3.67.05
apples coming in.
Yes, these were $3.40. And you sold these on the high this morning, didn't you, sir? So now you just bought them at these lows, which the close was $1.50, and you just got hit on the low of the day. Hallelujah there.
You got filled in the CMG?
CMG, he got executed on one. You have bids dropped to 3. There's that 370 bid now. And this is all being done live.
I'm at 350.
And the trader is talking to me as I'm doing this live. And you can see here that Chipotle Mexican Grill undercut the previous day's close. It was 338.89, 338.82 by only 6 pennies.
Can we keep the $1.60? Keep the 350?
Cancel all until I'm done. Here we are at 310 by $4 on this 335 call and Chipotle Mexican Grill. The time is 8:08 now a.m. Date is 9/21/2012. The closing price, we're below it. This is what we were talking about earlier at the 335 monthly expiration here on this option that we sold at 720, and we're trying to buy it lower now. And we undercut that. He went down negative 72 cents. The range is $4.85. The range was from the close to the gap high of 342.97 on the open, with the retracement right here live at 8:08 a.m. That means the stock market's been open 1 hour and a half plus 8 minutes in actual price movement. One of the things that we'll point out to our new MMTs is that we're going to steal this contract at a lower price. And we are. And we're going to put bids out here right now at $2.20. However, if we hit support level on CMG, we're going to know one thing for sure, is where that turn would take place. Here is the CMG chart. I'm populating the diamonds. Here's that gap I'm talking about. Here, we're right back here. This is what we're looking at, the support level. Now, as we populate this, and as the diamonds are populating live in the price, there's that price gap reversal. There's that bounce. He's brought it right back down to yesterday's where we had come off of the bottom. This was the closing area yesterday, right here in this price range. And there's that teeny line to the diamond. Here's that support line. Now, Having said all of that, here are the total stats. 16 IR. He went down minus 0.17. He was almost one delta high. 14 and a half teenies. It's 28 cents a teeny. And we can see here that each line is 28 cents per line. And we're going to see here how we hold this price level here with this chart. And we're going to use all our tools to steal the lower price. And we got 330 on the low. 750 was on the morning high. And how to trade a monthly entry at the lowest wholesale dollar capital risk is what we're doing here. And this is the MMT platform. And these diamonds here have to hold these price levels from where we were closing out yesterday on CMG before we had that big gap. Now that they've done this, this is how option volatility works. They bring these all the way down to the very cheapest price. They close at 461. We sold them at 720. And we're going to buy some more down here. And I've got limit orders down here at 220 now. That's in case if we break these diamonds right here, and he just did. So I got lower levels already out there. But we're starting to hold that bid and ask. And here is the bid and ask on Chipotle Mexican Grill. So 338, he's got 49.50 lows. And you can see right here on the 3-minute chart how the bid and the ask in the 335 call is at a wholesale dollar price entry based. So if you bought 10 contracts at 750, that would be $7,500. If you're buying 10 contracts at $2.20, it's only $2,200. We're breaking that support level. That low bid of 310 by 360, it's a 335 call. Monthly expiration, $3 in the money. And this is the price volatility in Chipotle Mexican Grill right now. And we put in 55 lows and with $3 here by 350. It's an illiquid option on an expiration. You do not have a lot of price movement. There is no high frequency computing buy script that has entered this name. Once these lows are exasperated here, we will come down to this next teeny line. We'll see how it holds here. This is going to be a major area of support. If it doesn't, it has to break that line right here in price to get down to $2.20 over here. So we know to get $2.20, it has to break that support level to get that entry there. And they're 295 by 350 at this moment with this market maker platform. And he brought that right down to previous day's lows, where he rallied up and he rallied down, and that's the close, that's the gap. That's how they took the premium out. They were 750 on the high. We sold that contract at $7.20. I can tell you what, most people don't know how to sell them, and this would end up happening to them. And then they would say, well, now what do I do? That doesn't cut the mustard. The profit was only $725. Right now, it would be a losing position if we didn't sell it to $720. We wouldn't have the $725 profit. No, we wouldn't. And that was an excellent execution, man. And it was done naturally and instinctively and profitably. And we're going to steal the bid here. Well, we got bids down here at 220. We got to break this support line in order to get this bid. And in our market making options pit, this is a monthly expiration. You got all kinds of things expiring today. People are going to square indexes. They're going to do all kinds of stuff. And we're going into earnings season, but we're teaching you how to steal the bid here at the lowest point. We sold up at the high. And this is what we do at Stock Market Funding. And this is live event. It's here. It's now. We have free trials here. They're amazed themselves. And why is it that these are called SMF Market Maker Turbo Option Wholesale Price Entries? And these options are marked down in the value in a frequency program. And I'm out here at $2.20. Right now, it's 270 by 330. And the time is 8:14 a.m. and it's 9/21/2012. And why do we do this live before the fact, long before the prices get there? It's because everybody, you're not going to learn this in an options book, or this is a market maker options expiration. 270, 320, 270, 320. Live. 10 minutes live in the tape. 270, 310, 220 on the limit in. And we had to break that support level. Now look what he's doing over here. He's bringing us all the way back down where these previous days' lows were. And that was a short all the way back down. Now, when it's time to get long at the wholesale price. And we're going to buy them cheap. We already made $725. We sold these 30 cents off of the high. Everybody knows, they think they know how to buy them. They never know when to sell them. Because they don't. And then they don't know when to get the next lower entry. Because they don't. And because these are done in options pricing based on the equity movement here, is that there is a price frequency between here and still in these bids at the low prices here. When you're hit at the low, remember, everyone else that didn't sell these up here or owned them from yesterday and they expire today and they're holding them, they didn't sell them like we did and buying them back cheaper again. Well, that is not very good. So we're trying to steal that bid when this thing hits support level. And once it does hit support and it does turn around, you got 62 lows. It's how we get the lower end, sell the high, buy back with bids at 220, and these could change. I may have to lower this to $1.60, depending on where this support level comes in here. Right now, on the MMT platform, I've got these bottoms that are finally hitting, but every bottom takes time to set up here. All right? And to confirm that this bottom is here, you have to go 1, 2, 3, 4, 5, 6, 17. He's right back up here to 340, but you have to start in increment. So you got to come up 1, 2, 3, then start to build the base and work your way back up in price for these to work on this Friday expiration. Now, excuse me about the microphone. It cuts in and distorts the voices at times and whatnot. So please don't think it's professional, because we're the most professional there is in this market, I can tell you right now. Based on a dollar price movement, where these support levels are going to be and where these lower entries are going to be wholesale. We don't have a confirmation yet, but we're working on it. And 290 is the low, and 460 was a close. 750 is a high, and 720 is where we closed. I'm going to conclude the video live with my MMTs and my free trial individuals. That, once again, as you learned here today, that you sold up here at the 720 area. Yes, you owned it overnight. You sold into the gap, and you're coming back to buy at the next wholesale entry. And once again, dollar capital risk. Meaning that if I'm buying at wholesale, I sold out at the retail, but if I'm buying wholesale below everyone else, my dollar risk, my dollars to make a market here are very minimized at this point. And we're going to come back and visit this trade today with our live people, and how bottoms have to be confirmed. And you're going to have to wind up. And another thing you're going to have to do is 290 is holding that low. And that was a nice $4.60 markdown range from the high. And we're still below the marketplace, because this is the beginning of an attempt bottom. The intraday range has to get above 25, go toward 50. There's lots of things that happen at bottoms, and most are time consuming and price volatility. One of the things that we'll have to do now on the upside of the reversal is get back above the 338.89, and these contracts will start to hold their lower bid and ask values. And it's 338.23. He's got to get above 89 cents here. Okay? And you have the reversal here in the MMT platform here. Right here. And you got a 12 IR right here. But you got to get above that closing price. And these will hold their lows right here. In the bid and ask range right here. And they marked them down there. And we're looking for that reversal. in high frequency. There is no high frequency in the tape on a buy script yet, because when there is, you'll see that the 3-minute upside bars have to be greater than the selling down to support level. The 3-minute prices, the teenies, like some of these are 2 teeny reversals. Now remember, MMT and my new MMTs, each one of these lines right here, it looks like on CMG you got 38 cents a teeny each line. And he went down, how many teenies did he go down? My goodness, 3.74. That equaled minus $1.42 from the close. That equals that in price. And you can see the beginning turn here. But remember that the upside turn, when they are going to go up in your market maker platform, the reversal diamonds have to keep ascending in value. And that the diamonds here hold this value. And this is what it looks like on the turn. And so when you're live here and you are making that turn and that diamond is going up, it's got to set in this base, shoot right up in the reversal, come back, fade in, and build off of the bottom here. And you can clearly see right here in the level 2 that you're not printing above the previous day's close price. It's still marked down 39 pennies. But that is the turn right here in the MMT platform. And the reason why the video is longer, it's because we have new live MMTs that are looking at why they should be here and how they can get these prices wholesale and how the diamond reversals work live in the market, that they're not being told some big whopping story. You can't find this in day trading books because, I'm sorry, market maker. That's what we are. Now, this has got to come down and test it. It's got to hold it. These bids at $2.90, it's still $3. We're still down there at $2.20 now. But I'm going to conclude the video. There's the price. Your print below it. For the new free trial people, this is a very low volume stock, Chipotle Mexican Grill. And here is the intraday chart, and here are the diamond reversals. Here is the actual platform and the ratios that move with price. They do not lag, as you know. And it takes time to see when the engagement on this buy side gets above there and runs this back up toward the highs in price volatility. And it has to set itself up. The bid is 3 by 360, 335, 922, monthly expiration with indexes and lots of other things expiring today. And that we made the high and we're looking to see what kind of power move will set up at the bottoms where the previous support levels had held. If they don't hold, well, then we will have to take our prices much lower.